If you want to be a part of the conversation before it happens here on YouTube, click that link in the description to join the free Courtside Financial Discord. It's pretty clear that NIO is facing financial challenges, but the company's ability to diversify revenue streams and adapt to changing market conditions will be crucial for its success. What's going on, everyone? My name's Obi, and welcome back to the Courtside Financial Podcast, where we talk about business and technology. In today's episode, we're going to be talking about NIO reporting on their Q1 earnings. So this is going to be a good episode. We're going to get pretty objective today, not subjective. So make sure you hit the like button, make sure you hit the subscribe button. If you're new here, leave a comment down below, as your engagement does really go a long way in helping out the channel. Alright, so like I said, NIO has finally released their highly anticipated Q1 earnings report. And so we're just going to dive right in. We're going to get very objective. And I might even sprinkle in a little bit of opinion as well, because I do want to know what you guys think and I want you guys to know what I think. While NIO's recent performance isn't the most impressive, it certainly is a good piece of news here because a lot of people were expecting earnings to be worse than what it is. And the stock has reacted positively to this. It's important to consider the potential risk and challenges, though. The electric vehicle market is highly competitive, with numerous players vying for market share. Factors such as government policies, supply chain disruptions, and changing consumer preferences can impact NIO's performance and market dynamics. Therefore, it's crucial for investors and enthusiasts like myself to stay informed, conduct thorough research, and carefully assess the risk associated with investing in electric vehicles. Their revenue surge, improved gross margin, and progress towards profitability indicate a company that is making significant strides in the electric vehicle market. In terms of revenues, NIO reported total revenues of $1.55 billion for Q1 2023. This marks a 7.7% increase compared to the same period last year, but a significant decline of 33.5% from the previous quarter. Vehicle sales revenue amounted to $1.34 billion, with a slight decrease of 0.2% from Q1 2022 and a significant drop of 37.5% from the previous quarter. The decline in vehicle sales can be attributed to a lower average selling price due to increased deliveries of the ET5 and the 75 kilowatt-hour standard range battery pack model. However, this is partially offset by an increase in delivery volume. Moving on to other sales, they experienced remarkable growth, reaching $211.4 million, reflecting a significant increase of 117.8% compared to the first quarter of 2022 and an 11.3% increase from the fourth quarter of 2022. The growth in other sales was driven by increased sales of accessories, provision of repair and maintenance services, auto financing services, sales of used cars, and power solutions. It's clear that NIO's effort to expand its user base is paying off. Now let's take a closer look at the cost of sales and gross margin. The cost of sales for Q1 2023 amounted to $1.53 billion, representing a 24.2% increase from the same period last year, but a significant decrease of 31.9% from the previous quarter. Gross profit, however, stood at $23.6 million, marking a substantial decrease of 88.8% from Q1 2022 and a 73.9% decrease from the previous quarter. This decline in gross margin was primarily due to a decrease in vehicle margin. The vehicle margin for Q1 2023 was 5.1%, significantly lower than 18.1% reported in Q1 2022 and the 6.8% in the previous quarter. The change in product mix and increased battery cost per unit played a role in driving down the gross margin. Turning our attention to operating expenses, NIO's R&D expenses were $447.8 million, representing a substantial increase of 74.6% compared to the first quarter of 2022. However, there was a decrease of 22.7% from the previous quarter. Selling, general, and administrative expenses amounted to $356.2 million, reflecting a 21.4% increase from Q1 2022 and a 30.7% decrease from the previous quarter. Now let's address the net loss and the business outlook for the second quarter of 2023. NIO reported a net loss of $690.1 million for Q1 2023. This represents a significant increase of 165.9% from the same period last year. However, there was a decrease of 18.1% from the previous quarter. Looking ahead, NIO expects vehicle deliveries for Q2 2023 to be between 23,000 and 25,000 vehicles, reflecting a decrease of approximately 8.2 to 0.2% compared to the same quarter of 2022. Total revenues for the second quarter are projected to be between $1.27 billion and $1.36 billion, representing a decrease of approximately 15.1% to 9% from Q2 2022. It's pretty clear that NIO is facing financial challenges, but the company's ability to diversify revenue streams and adapt to changing market conditions will be crucial for its success.